Good morning, everybody. It's Breakout Bag Lunch, and I'm happy to say that today, December 11th, 2025, was another green day. We are moving out of the drawdown phase. At least that's what it seems like so far. I'm going to start with a trade that I took yesterday afternoon, actually, that I didn't cover in the morning yesterday. And then we'll talk about the trades that I took this morning and my next steps from here. So let's get into it. As you all are aware, we had the FOMC committee meeting yesterday. Fed interest rate decision. That is a meeting that causes a lot of volatility in the market. So naturally, this is also a period where there's a lot of opportunities to make and lose money. Fortunately, I did make some money from a nice little scalp that I took at 2:30. We had a break and retest of this sharp upward right when the interest rate decision was announced. So once I saw the strong price action, we had this green candle that took out the high of the previous three other candles, and we had about a 50% retracement of this move. Once I saw all these factors, I got into some long contracts on MES and sold right about here for about $120 profit, and that was a nice way to end the day. I didn't trade after that for the rest of that day yesterday. And now let's talk about today. Today is when I implemented some of the risk management strategies that I discussed in a post I made, namely about trailing my stops and taking more one-to-one trades. And here was the first trade on MES at 10:03. Right down here, I marked a demand zone, and I think I mentioned this before, but I'm going to make a separate video on how I am marking my supply and demand zones. Anyway, we had a demand zone here, and we had some consolidation and this strong push up that took out the highs of 1, 2, 3, 4, 5, 6, 7, well, several candles that came before it. That was my signal to go long. I sold that here. I took partial profits with two MES contracts. I let another contract run for a little bit longer. Probably should have let this one run until we were at like a 1 to 5 risk reward. My stop loss was down here. Take profit was up here, but it was still a good trade. Second trade for MES was here. This was a break and retest of the 5-minute opening range. This upper line here actually does not represent the high of the 5-minute range. I'll explain what that is in a moment, but I'm just going to put the opening range back on the chart just for you to better visualize the trade. There we go. So we had this break of the opening range after this extremely aggressive move down. Talk about a reversal. After that, notice how we have a fair value gap on this 1-minute chart. A fair value gap is just when you have three candles where the first and third candles don't overlap with the second candle. This is a sign of strong bullish or bearish momentum. In this case, bullish. And once I saw this, this was my signal that I wanted to get in longs, but during a pullback. And we did have a pullback here, and then we had this strong momentum candle, which was my signal to buy. However, it wasn't really much momentum afterward. Kind of just went up and down for a bit. Because of that, I did move my stop up just based on the added risk and the fact that trade wasn't working out as quickly as I had expected it to. So I sold here once price broke down the 5-minute range high. And these are all the MES trades for today. And what I'm looking for in the afternoon is a break and retest of this high here. Basically, a break and retest of this high before we had that strong move lower below the opening range. Now if we don't get that, then it's okay. I'm not going to trade. It looks like that could play out at the moment. We'll see. Right now, in order to feel more confident about taking a trade for a long entry, I probably want to see a candle close above these two candles here, just so I have more reassurance that we actually have strong bullish momentum for another move higher. In terms of gold, it was one winning trade, one losing trade. I'm just going to go back to the 1 minute chart to explain. So basically we had a break and retest. This was a high of the 5 minute opening range. We had this aggressive move up. We also had this fair value gap, which I explained before. Then we had this retest, a hammer candle. This hammer candle was a good sign for me to take a long entry. I guess this was a little early, but we did have a good follow through at first. This trade, it got so close to my price target, my take profit area, which was right at 4273.6 ish, but right when we got there, price went straight down. Happens sometimes. Our trade was a loss, and just like MES, we had to move lower. Then we went back above the opening range and took another long entry. This one was actually successful, and so I sold up here. Of course, I could have held for much longer. It made, oh my gosh, I could have made way more money. But that's okay. I'm just looking for base hits. As long as I stick to my process, then I'm happy. Even if I could have made a lot more money. Here, what I noticed was, looked like there was a good amount of buildup. Probably should have just waited a little bit longer for more confirmation of bullish momentum. I think this candle or this candle here would have been better entries. So yeah. A profit of $88.08 today. It's nothing fancy, nothing crazy, but we're still in the game. All right. I would say for sure that trailing my stop loss is worked for me so far. I mean, it hasn't been that long since I've been doing it, but it seems like I'm going to get more consistent results. I'm also more careful about 5 minute opening range, break and retest trades. Typically, the best chance of there being a strong momentum after a retest is the first time a price tries to retest an area. There isn't a strong momentum after that first retest, and then you get into the second retest or the third retest. That's when things start getting questionable in my experience, which is why I have this line drawn here on MES. At this point, since there was just so much back and forth and retesting and touching and crossing the 5 minute range, it doesn't hold any significance to me. At this point, I don't care about it at all. I'm really looking for a retest of this move. This level is more significant in my eyes, just because this is the high before we had that aggressive move lower. And as you can see, just with the market being open now and watching this in real time, we had a move higher. We broke this range, but there was no good retest, which means there was no bullish trade here. And later on in the day, I might see if we can get another break and then hopefully a bullish retest. Otherwise, I'm going to call it a day. In terms of where we go from here, I'm going to continue with this more aggressive risk management strategy to keep my account from blowing up, and so that I can pass the combine. This just might not be the best idea, but I'm thinking about trying other prop firms out. There are a lot of sales in the holiday season, and I know that's how they get you. They want you to buy 20 Apex accounts and blow them up in a day and cause you to lose hundreds of dollars, if not thousands. But it might actually make more sense if I have a strategy that has, let's say, a 70 or 80% win rate, and one that doesn't have very aggressive take profit. Let's say a strategy where I'm taking profits at 10 points or so, then it might be better to trade with actual minis instead of micros. I think I'm gonna to experiment with that. I'm gonna to stick with the micros just for this challenge at the moment, but I might actually buy another account, another platform, and trade minis and see how that goes. My idea is that I can trade minis to pass the eval quickly, and then when I have the fund account, I can size down and just trade micros and play it safe and get consistent payouts. Okay, what do you guys think? Anyway, hope you found this useful. Otherwise, I will talk to you all tomorrow. All right, bye.